Every year, people say the same thing. Let's just wait until the spring market. Because traditionally, spring is when real estate becomes more active. But the real question this year is, will the spring market actually be stronger or simply more competitive? Right now, across Metro Vancouver, there are just under 22,000 homes for sale. That's one of the highest inventory levels we've seen in years. So today, let's break down what the numbers are actually telling us and what buyers and sellers should be thinking about as we head into the spring market. Let's take a look at what February's numbers are telling us. First, something many people don't realize. When people talk about the Metro Vancouver housing market, they're actually referring to two separate real estate boards, the Greater Vancouver Real Estate Board and the Fraser Valley Real Estate Board. They cover different areas and they don't overlap. But when we combine them, we get a much clearer picture of what's happening across the entire Metro Vancouver region. Across the Fraser Valley, there are currently about 8,300 homes for sale. Across the Greater Vancouver, there are roughly 13,500 homes listed. Combined, that brings the region to just under 22,000 active listings. In February, the Fraser Valley saw 843 homes sold. Greater Vancouver recorded 1,648 sales. That's roughly 2,500 homes sold across the region. When we look at the sales to active ratio, we're sitting around 10% in the Fraser Valley and about 12% in Greater Vancouver. That places the market firmly in what we call a buyer-leaning environment. Another way economists measure the market is through something called months of inventory. It simply measures how long it would take to sell all the homes currently available if no new listings came on the market. Generally speaking, 4 to 6 months of inventory is considered a balanced market. Below 4 months tend to favor sellers. Above 6 months tend to favor buyers. Right now, across Metro Vancouver, we're sitting at roughly 8 to 9 months of inventory, depending on the property type and location, which explains why buyers currently have more choices and more negotiating power than we've seen in a while. If we simplify the entire market right now, it really comes down to 3 numbers: inventory, sales, and confidence. Inventory tells us how many homes are available. Sales tells us how quickly those homes are being absorbed. And confidence tells us whether buyers feel ready to move forward. Right now, inventory has increased. Sales have slowed compared to previous years, and many buyers are simply taking more time before making decisions. So the question everyone wants answered is, are prices going up or going down? Let's look at a few of the major markets across the region. In Surrey, detached homes are sitting around $1.37 million, down slightly from last month and about 8 to 9% lower than this time last year. Townhomes are around $770,000, also slightly lower year over year. And condos are about $488,000 with a similar trend. In South Surrey and White Rock, detached homes are generally around $1.7 to $1.8 million, depending on the neighborhood. Townhomes are roughly around $900,000 and condos about $620,000. This area tends to behave a little differently because of downsizers and lifestyle buyers. And in Vancouver, benchmark prices remain higher overall. Detached homes average about $1.83 million. Townhomes sit around $1.05 million and condos are roughly $708,000. While some segments saw a small month-to-month increase, prices overall are still lower compared to this time last year. Now, one important conversation I've been having with many sellers lately is about chasing the market downward. Right now, prices are adjusting about 1% month to month. That might sound small, but remember, 1% on a $1 million home is $10,000. Typically, the last home that sells set the tone for the next one. If the most recent sale in a neighborhood was $1 million, the next comparable home might sell slightly lower. Then the next one after that. Market often moves like a row of dominoes, which means Sellers who wait too long can end up chasing the market down instead of staying ahead of it. I often hear sellers say, "We're not in a rush." But in markets like this, not being in a rush can actually work against you. Because by the time a seller decides to adjust their price weeks later, the market may have already moved again. And now competition has entered the market. Often the goal is to be the home that sells first, not the last one sitting on the market. But strategy matters. Before adjusting price, we always ask an important question. Have we fully maximized the marketing strategy? Exposure matters, presentation matters, negotiation matters, and the reality is, not all realtors approach this the same way. Another question most people ask when they see more listings and rental units is, where are all the buyers? The reality is the people did not disappear. What we're seeing is what economists call a timing imbalance. A large number of homes that launched during the low interest rate years are completing now, increasing supply. At the same time, buyers are simply moving more cautiously. So supply has arrived faster than buyer confidence, and that's why the market can temporarily feel slower. As we move into spring, we will likely see more listings coming to the market. But historically, we also see more buyer activity. So the real question isn't whether the market becomes busier. It's whether demand grows faster than supply. Real estate markets move in cycles, and markets like this are where experience and strategy matter most. Understanding how buyers and sellers behave inside those numbers is what helps people make better decisions. If you're thinking about buying, selling, or simply want clarity about your options anywhere across Metro Vancouver, our team would be happy to help. I'm Katrina from Katrina and the team, here to help you prepare, not panic, and move forward with confidence.